Hello, friends. Once again, I'm so glad to bring you another episode. So, I want to take this opportunity to thank those that like the videos in case they like them. And I want to thank those that are my subscribers. So, I really appreciate you so much. So, yesterday I started uh, on some content using indicators, moving averages basically, but we're basing off the BTMM strategy. So I'm here to continue with what I did yesterday, though today I uploaded the video on price action volatility 75 candle rejection, and today we are going to be using volatility 75 and boom and crash for this BTMM content. So I really want to show you that you can apply BTMM not only in forex but even in synthetic indices. The beauty, sometimes it may be a beauty, but the application is kinda different. It's kind of different, somehow different, because in synthetic indices we don't have trading sessions, so there is a constant volatility. So currently this is volatility 75. We are going to go on boom and crash. I think crash 1000 to see the application. But for today's content, these are the main things that I'm going to cover. The market, I don't know what it's market maker cycle. The market maker cycle, we are going to talk about it. Then we are going to talk about levels. Actually, let me make a correction here. It is market. You get? So yeah, it is market maker cycle. Then we are going to look at the bullish and the bearish. We are going to look at the levels of rise or drop, and then we are going to look at the tradable setups. So this is most likely to be the last episode of covering BTMM only. You get? BTMM only. So this could be the last one. So unless you guys encourage me by liking the video. So maybe let me first make some little announcements before I give out. Just a minute. Just a minute. By the way, you guys, when I'm recording these episodes, I imagine that I'm talking to someone. So I really respect you so much. So these are the upcoming programs. Today is the 4th. I don't know when you'll be watching this video, but today is 4th of January 2023. And these are the two events that I'm organizing upcoming. So I'm going to hold a 4 days boot camp for BTMM content only. You get? BTMM content. Actually, basically what I'm going to be talking about today. So I'll be going in details, but it's a 4 days boot camp, and it will start on the 10th. But for those that are willing to be part, the cost is just $100. BTMM 4 days boot camp. You get? So I'll be talking about BTMM only, and we are going to be applying it majorly on synthetic indices, but then we shall also see how we apply it to forex. I'll be explaining both, but most examples are going to be related to synthetic indices. By the way, BTMM is really nice on synthetic indices. It's applicable. Then I have an 8 days bootcamp for advanced price action. For this, we shall be using SMC/ICT, because SMC basically it's to me it's like ICT. So basically ICT plus BTMM. So for this 8 days bootcamp, for it is detailed. You get? It is detailed advanced price action, but then at the end we blend in BTMM. You get? So basically it's like my full package. This is my strategy. So it includes guidance on flipping small accounts. You get? So the cost is $350. This one is much more expensive because there is a lot more content in this next one. But then for those that want BTMM only, not even the full course of BTMM because it's a long one, but just summarized things personally that I got out of the strategy. That is the course. So I think I don't need to over talk about that. So the link is going to be in the description on Telegram. You can text me if you're interested, and then you'll be part of it. It's starting on the 10th, and payments are starting today, the 4th of January 2023 to up to the 8th of January 2023. You get? So that's it. But the first one will come first, then we shall have the 8 days boot camp. So after the 4 days, that's when I'll start this 8 days boot camp. So let me go back to the content. Sorry. So today we are not going to use gold. Oh, let's come here. So let me start on the first one. So I said the market maker cycle. So the market maker cycle is, according to Steve Mahoro, he says that it comprises of three phases. You get induce, trap, shift. You get, and now what does this mean? Induce, the market maker creates a consolidation to induce people. They trap them and then shift. You get, and then shift. You get. By these concepts, sometimes I see a lot of relationship to ICT or SMC. You get. So this is induce trap, shift, and then that is, let's say, for a bullish, for a bearish market structure. But then for bullish induce, the induce, actually sometimes it says the market maker hides in a consolidation. So they consolidate, induce, they trap, and then they shift. You get, they shift. So what does this give us? So for a bullish market, now let me go here. We've seen induce, trap, shift. So that's why for a bullish market, actually now it says the market, uh this one is on levels. The market has 3 levels. Let me quickly talk up. I'm going to be joining point like this part to this part. It says the market has 3 levels, levels 1, 2, 3. But then in reality, actually, normally we have 3 levels, but less levels of rise or drop. You get, but then sometimes we could even have, most of for synthetic indices. By the way, when it comes to synthetics, we can even have 8 levels. You get, we can even have 8 levels, and even we have to account for sometimes trend resets. He talks about them. So let's say we can get a day of the second of rise, and then on the third day we get a reset, and then maybe we get a continuation. So these levels, sometimes you have to be careful. Sometimes levels, by they give people a hard time, but I'll go in detail of that during the boot camp. So that is, and then it says the bullish market, we have a W. You get, so we have W's or peak formations. You get peak formations, a peak formation high and a peak formation low. Now peak formation low, this could be, let's say, a W. Most times it doesn't necessarily mean that the market, let's say it's having equal legs. No, but then we can have a day of rise, and then we consolidate, then we get a V. You get, for a bullish market it's WVVM. You get, then we induce, trap, shift, then we get another consolidation, and then we they trap, and then shift, and then we end in an M. You get, so we started with a WVVM. You get, yeah, but these things you have to there are a lot of things that you have to blend in. So that's why yesterday I made an introduction of the moving averages. If at all, now for this one, for BTMM it has about 5 moving averages. Yeah, 5 moving averages, but for me I eliminated the 5 period moving average, and I'll be explaining, because basically the F5 normally shows these patterns. You get, that's what I normally use it for, but I don't really like it so much. So that is, let's say, the buy model. I've explained that. So for a bearish market, we have an MAAW. By that we mean we get a peak formation high. Oh, first, wait, I want to get somewhere where I can illustrate this. Yes. We have MAA, so we can get a peak formation high. By the these things are really good. So we get a then the induced trap, shift, induced trap, shift, and then we end in with a nice W. You get, so that is for that is for that is for the wait. Yes, that is for the bearish. You get, this is for the bearish market. You get, for a sell model. So having known that, now I've talked about, I'm just making an introduction. I've talked about the bullish and the bearish, and then he normally says that we normally have uh 3 levels. By the way, this guy, what I thank him for is that um he gave me a thinking, like he impacted so much on my psychology, in that you're taking entries like with the mind that someone is watching over you. You get, someone is watching over you, so it makes you to get more patient, and then you have to know. So and then he talks of now the levels. Normally, this is how we count levels. Level 1, it's normally a 13 and a 50 cross. Now I told you, now we have a white background, but the red is the 13, the blue is the 50, and the 200 is the black, and the purple is the 800. Now, for a black background or a dark background, the 200 is white, but for a white background, we make it black. You get? Where I'm currently, it's noisy because of the rain. Let me hope it will not inconvenience. So now, I've talked about that. So now, when the level 1, when 13 and 50 cross, we, by the way, there are many ways of counting levels, but sometimes moving averages are one of the ways we count levels. You get, are one of the ways. So given that today I'm talking about moving averages, we can count this to be our this here, this fall here, to be our level 1. You get, and then we have 50, 200 cross. Now 50, the 50 is the blue one. When it crossed, you get, first of all, we had gotten a peak formation, you guys. You get? We had gotten a peak formation, this W here. You get? So we got a drop. You get? So they crossed there. That is, we can say that is level 1. Now here, with a 50, 200 cross, we can call that to be our level 2. You get, to be our level 2. Then um then 50, then 200, 800 cross, or 50, 800 cross. Now for level 3, sometimes it is the 200 crossing the 800, or the 50 crossing the 800. You get? So now we can see here the 50 is the blue. Here, what can I do? Yes. Now, yes. Okay. I'll get that example somewhere else. There's something that was mixing out. So whenever we see, I'm going to see, I will check for that on boom and crash, by the way, for this example of level 3. You get? But now, before we go to boom and crash, I wanted to show you then the next step. By the way, the next step. These are some of the major things that are going to be in the boot camp. By the way, in the boot camp, I'm going to be emphasizing these 3, going in detail of these, because they are really important. If you master them, there is a lot to this. Now we have what we call the tradable setups. You get? You have to, for tradable setups, we have either a reversal setup or a continuation setup. Now personally, I like continuation setups. You get? Continuation setups. And now I'll be talking more about that when we go on crash, on the crash example. You get? Now uh let me explain the part of reversal setups. Now, reversal setups, there are those setups where, let's say, we get an aim, you get, and then we get a drop, you get. Now, when we get a drop, after an aim, or a peak formation, you get, when we get a drop, there is something that I told you, you get, there is something that I told you, is that if at all moving averages cross, you get, I told you, when moving averages, let's say we are moving like they are like this, and then let's say let me get another one. You get, when these moving averages cross like this, you get, when they cross and price has been moving upwards like this, like that, when they cross and then price comes, we get a retest. We get a retest and then we drop. So that one is kind of tricky, but now let me explain it. Now there are a lot of things that you have to be combining. I think you should watch that previous video. Now these reversal setups, sometimes you may not clearly understand when actually for level one it's always really tricky, and it's more tricky when it comes to forex. Good enough for synthetic indices, it's really easy to spot level one. But now we have, given that we crossed, and now we've crossed all moving averages have crossed, you get, we get a retracement. So we get a retest normally, you get, we get a retest. Now we dropped, and now we come, we either retest. Now most of the time for intraday, now this one it will depend. For intraday we use the 50 period as the rejection moving average. Let me call it like that, you get, to help us detect the reversals, you get. So now we get a retest to those moving averages most of the time, but this varies either when you're swing trading or scalping, you get, or taking entry day trading, you get. So for intraday setups, we focus on the 50, you get. So sometimes that's when you drop, and then you can wait for a retracement, and then you drop with the market targeting down, you get. But you have, what you have to know, the tradable setups, or even just like in ICT, I always say, you have to know whether you are in a trend continuation or a trend reversal. Let's say the market makes these moves. This is a reversal from this point to this point. This is a reversal, and this is a continuation. You get? So that's why I told you in the boot camp, there is the boot camp where I'm going, the 8-day boot camp, we are going to be in advanced price action, but we are going to be combining SMC plus BTMM. You get? So, but they all complement each other. You get? So these are the tradable setups. Now let's look for some examples. Let me go here on Crash 1000. You get? Now uh, the beauty with BTMM, when using BTMM and synthetic indices, is that you can be comfortable when you're trading because you're not expecting spikes. You can easily detect days. Let's say if days it's a day of drop. For these ones I told you, normally in forex you'll get, let's say, day one, 3 days one. I'm having period separators: day one, day two, day three. Let's say they are days of drop, but and then you get a reversal. But then for synthetic indices, the beauty with them is that you can get a full week of drop. You get a full week of drop. Let me count. You can see that 1, 2, 3, 4, 5. Like when it is a full week of drop, you get, you can see that I told you the 50 period is our intraday moving average. You get, we come, we retest it, and then we drop. You get, so you can take entries. You can be taking entries here. They crossed up this side. You get, and then you drop. You get, they come, they retest the 50 period, and then for you take entries, you drop. They come, they retest the 50 period, and then you drop. You get. So basically that's it. No, and there's a lot to it anyways, you get, there's a lot to it. But then sometimes application differs, and then even time frames. Now, there are more two things that I'm going to talk about on this same strategy. There is something that I told you. These moving averages are exponential. By the way, have you ever asked yourself? Yesterday, I only mentioned that they have a ratio of 1 to 4. When you divide 800, the 800 period, 800 divide by 200, you get 4. When you divide 200 by 50, you get 4. When you divide 50 by 13, you get about 3.8 something, and when you round off you get 4. So they have a common ratio of 1 to 4, you get. And then it's one of the similarities, by the way, you get. And then the next thing is that they're exponential. Now when you search about something exponential, it shows the explosiveness in a given direction, you get. That's why, maybe that's why he chose exponential moving averages. Now if at all, like generally exponential moving averages, they show us if at all we get a cross, you get, they are communicating to us where most of the volume is flowing. Let's say if at all the market has been dropping like this, it's dropping, and then that's why we normally get a bounces off exponential moving averages, because they are showing us where the explosiveness is facing. You get, that's why when we get a bounce of an exponential moving average, you see that price normally comes and then it breaks a structure. You get, and then when we cross an exponential moving average, normally we it shows the explosiveness has shifted. You get, and now we start seeing explosiveness happening like this. You get, explosiveness happening like that. So we have to watch out also for that. You get, so basically there's a lot that you can talk about, but I believe anyone interested who is going to be part of the boot camp, you're going to really benefit. For those that are going to be part of the 4 days boot camp, it's going to only be BTMM, and these are the main topics that I'm going to be talking about in those 4 days, but only using BTMM: the market maker cycle, the induced trap shift, the bullish and the bearish, because the market is either bullish or bearish. And then we are going to be looking at the levels. And then for levels, we have what we call trend resets. You get those resets and all that. We shall be looking at those ones, what they mean and where do we get them. And then we shall have the tradable setups. You get, we shall have the tradable setups. One more last thing. One more last thing. Let me not miss out this. Let me come here on MT5 and then I show you something. I want to demonstrate to you something. If I'm to come, yes, if I'm to come here and then let's say I'm on M15, let me show you about these moving averages. You get, you see this part, you get this part here. Most of for synthetic indices, there is something that I backtested and I found out that it was happening in an amazing way. You get, let me hope the video will not be so long. So you see this part when it is on M15 and we are retesting the 50. You see what I liked about this, when you are on M15 you can know what is happening on the daily time frame or the H4. Now a retest on the 50 period on M15, it is a retest on the H1, on the H1. You get, let me go on H1 and then you see it's a retest on 13. Yes, a retest on the 15 period, or a retest on the 15 period on M15, it is a retest on the 13 on the H1. You get, and now a retest on H1 to the 50 period, it is a retest on a on a retest on the 50 period, which is the blue. It is on H1, it is a retest on the 13 on H4. You see this part here, it is just down here, it is just down there. So now this, if at all you are on M15, if at all I'm on M15 and then I get a retest, because the 13, by the way, what I didn't tell you, the 13 is for entries. You get, it is for entries. When we get below the 13, we take entries. So now a retest on M15, a retest on the 200 on M15 then becomes a retest on the 13 on H4. So which means you can swing trade with this strategy. You get, because now if I come and I retest, if I retest the 200, you get, you can take your entries and then you move explosively down. You get, because you know you're going in for long ones. You get, anyways, there's a lot I can say. For swing traders, we shall be looking for, I'll be explaining for swing trading, we shall be looking at the 800 more, how we use it on a H4 retests. Basically there's a lot that I cannot just bring out. Anyways, for now, you guys, I will appreciate if you guys like the videos, And you can text me on Telegram. You can reach out for that boot camp, for the boot camp. But let me see what next I'll bring on the channel. You can also suggest what you want to learn next. All the best in trading.